Hey traders, happy Friday, and I've got that Friday feeling. It's time for a glass of wine, and why not? It has been an amazing week. So you're probably going to think I'm a bit of an alcoholic now. That's a couple of videos this week. I've had a glass of wine. Well, it's not often I release the videos at this time of night, but in order of a little bit of a celebration, it's been a good week. It's everything that we've planned has come off, and I'm going to run through some of that right now. It's our Flashback Friday. Want you to see something that we called at the beginning of the week regarding the US dollar soaring into the elections, and we actually anticipate the US dollar is going to continue. Our watch list will be produced on Monday, but we actually expect the US dollar to continue midway through November, maybe until the back end of November, but we'll see. We'll see how the markets play out. So a couple of things I want to focus on is, if we just look at the weekly candles, look at this weekly candle, started here, finishing up here, and what's really key is potentially finishing above 94. We stay above 94, that's going to be a key barrier. Next stop is going to be up at 94.60, and if you look left, we're just bringing the ray line, the bottom of this wick here. When the markets went haywire, you can see that's where the market rebounded. Now that is actually going to be a real key technical line coming into next week and the following week and the week after that. Should we break that, that's going to give a bit more headroom for further move in the US dollar, but it could also be a key area for technical reversal depending who wins the US elections. And then following that, it's not necessarily who wins, it is whether there's going to be a total rollover in terms of who's got the Senate and who's got the House. If it's a clean sweep, blue sweep, expect to see the US dollar sell off, and the reason for that is just pure stimulus. The amount of stimulus that Biden will put into the marketplace, there's going to be surplus dollars. Initially it might see dollar strength on the premise that corporate taxes are going to rise. You'll see indexes and equities sell off initially, and that may cause for a bit of dollar liquidity, and then from that you'll end up seeing that money flow and surplus. So what were the trades and what's been the highlight of the week? Well, I think the highlight of the week is really going to be the dollar CAD. We sent this trade out on Wednesday, and it wasn't just to our members, it was to our free Telegram group as well. We were saying, who's a buyer of dollar CAD? This one trade, dependent on how you actually employed your trade management, will have at least returned you a minimum of a 5% and up to a maximum of around 12.5%. This little bullish candle in here, we sent this out prior to it closing saying, buyers, look out for buyers coming in here. And as you can see, I'll just highlight the actual return that this market made through here, which was over 12%. And you know what, that has literally just paid for Christmas. And you can see over 14%, allow for spread and a few extra pips here on either side, call it 12.5%. Here at the club we actually closed it out for 5%. We have a rule where if we get cumulative profits of over 5%, we take the money, especially in the current climate. So although I would like to say there's 12% up for grabs, we weren't that greedy here. We banked our 5% and said thank you, we'll come back and look for the next opportunity. Where else do you get 5%? Not only in a year, but in a single day. So well done to all you traders in our free Telegram group and our members. So not only that, we've been looking at other trades as well. Sterling is one to probably be a little bit cautious of due to Brexit negotiations stalling. 1 minute there's positive spin, the next minute is negative spin. We can see here right now, we've seen a negative weekly candle here on cable, but really the market condition that we're looking for is I want to see the market break through 28.60, and if it does, we'll see a push further down. If we break that down into dailies, you can see it really is stuttering and stalling. Now, further upside, if we do get some positive news regarding Brexit, which will probably come following the US elections, if Trump gets in, then you would probably expect to see Boris Johnson playing even harder ball, as we would expect some trade agreement formed with the US. However, if Biden wins, then expect to see Boris probably roll over a little bit, and the UK may submit to some concessions, and we could see a deal being done which would lead to some pound strength, and expect to see not only that, but the rollover effect of potentially stimulus packages being announced, and you could see pounds surging through here and back up to 134. So look to use that counter trend line. But we didn't really take any trades on pound this week. Euro dollar on the flip side has produced some nice trades this week, and for those that have been following us, we were looking for a break of this, and that market has then broken through, and we saw some lovely moves on euro dollar. So for those of you that got into those, well done. And then there was an extra move that we looked at through here today, but we're completely out of euro. Moving into next week, we'll be looking for a pullback into this structure zone. The risk currencies really have been brutally taken apart this week. That's the Kiwi and the Aussie dollar, as well as the Canadian dollar, which we've already run over. You can see the weekly candle here on the Australian dollar. Big sell-off into the even handle 7,000. 7,000 is going to be a pivotal area. If this breaks, expect to see further downfall on this. So some huge pips up for grabs if Aussie dollar breaks and we see that dollar strength continue. This is going to be reliant on what happens over on the indexes, and we're probably going to see some more selling in the indexes to put pressure on that Trump victory, or let's say not so victorious coming November the 3rd. Moving over to Kiwi, this is a prime area right now, looking to see this head and shoulders pattern complete. We've seen the market operating within this bear flag. Let's just go to the daily. For those that watched our signals, we were telling traders to get short, watching for the rejection from here. There was a beautiful counter trend line move that we saw that broke, and we took some lovely profits out of this. Now, if you were trading, there was a lovely hourly engulfing candle through here, which was an excellent way to get into the market. But then today, we've seen the market sell off again. The next move is going to be critical. If we break and come below this support trend line or the bear flag on the higher time frame, expect to see the neckline around 65.30 tested. So I'll just drop the ray line in, and this is what you're going to be looking for. You're going to be looking for price to head back down into this 65.10, 65.30. So this is going to be critical. If we break here, further downside on Kiwi. Japanese yen, we've seen price now struggle at 104. This is absolutely key. We've seen yen strength this week as the indexes have sold off, but 104 buyers have been coming in. Let me just fire this ray line in, and you will see 104. The market has been finding a bid and buyers have been coming in, but they've been failing to break and push higher. If we see a break above this trend line here, let me just draw this in so you can see what I'm referring to. If we see a break above this line here, then we will see a further push up into the 110s. However, if we see those indexes continue to break, don't be surprised if we see a break of 104 and a flash move down towards the 101s. There's going to be a lot of stop losses under here, so market makers will be hunting those stops, and we potentially could see a big move down towards 101. What does that mean for our silver and our gold trades? Well, as I highlighted to you at the beginning of the week, I'm bearish when it comes to silver. I'm looking for further moves south. I am looking for that move towards the $20 barrier. Although first targets, we will be looking at price coming into the 21.50, 21.70. And we're looking at that based on this impulsive move followed by a correction, and then that measured move out into the $20 barrier, which is also a negative 127 extension. So looking for any sort of corrective move, how we may finish, expecting to see the market at least test these lows here of just short of 22, and then maybe extended moves down towards 20. Good barrier and barometers to look at will be the indexes. Now, highlighting here on the Dow Jones, you will see that this key level of 26,500 has been broken. It is the neckline of a double top. Now, this could quite easily be a false break, and we could see momentum come back in and take us up here as the plunge protection team come in, but we won't know that until next week. So opportunities here. If we look at the S&P and the Nasdaq, you'll see that the neckline hasn't yet been broken. So expect to see price tested at the 3200 on the S&P, and then as we go over to the Nasdaq, expect to see price tested in and around that 10,700. So further declines on these as price approaches this could be good buying opportunities for certain stocks. Okay, so that's it from Trade and Train this week. We really hope you've enjoyed our content, and more importantly, we hope you've made plenty of pips. If you have, please comment below how many pips you've made off our analysis, and last but not least, make sure you hit like, share and subscribe. This way all our videos come straight to your inbox and you don't have to come searching for them. Have a fabulous weekend, guys, and we see you on Monday. Good night.